Good morning, guys. Morning video here, real quick. So basically, I don't know if you guys felt it yesterday or not. It really felt like a blow off top. We finally reached that stage. We just kicked off earnings seasons with the bank yesterday. Everything was pretty much selling off except for the semiconductors, given the news. They held the semiconductors up high and strong into the close, and after the close, they just started dumping it. So we had this big gap up in the SMH, which looks like today there's a good chance we're going to fill that gap uh, down to 285 area, I guess, 285.30. So we got a gap that takes us all the way down to 285, so yeah, 30ish, something like that, and we're already at 287.46. So there's a really good chance that we're going to fill this gap, come back down, fill this gap at the minimum, maybe worse, in today's session. So heads up on that here on our semiconductors after such a big news with NVIDIA yesterday. Okay. And that being said, NVIDIA, see how it's getting impacted. It's coming down a little bit today too. It's still got a long ways to go to come down to fill its gap. Its gap would put us down to 60, and basically 164. So we still got a long ways to go on that. We are into uh, a fast move rejection area potentially here, a potential on using your Fibonacci's. So there could be a fast move rejection area here. So basically, when you're using your fibs, this area between the 23 sixes, this is price discovery zone using those fibs. So this could be a very fast move, takes you down right. Guess what? The 184, 164. Where's that at? 164. So this was a very fast move up, could be a very fast move right back down. Be very mindful of that. So, and that would actually cement the idea of an exhaustion high if NVIDIA were to do that move in today's session. Okay. Top watches for me today, and I have been mentioning before the importance of the bond market. Guess what, guys? We broke a critical support yesterday, and we're back below the daily 200 here on the Z ends. Heads up on that. Now, if anybody knows anything about the bond markets, basically we go into backwardation for a very long period of time whenever we're coming market recovery. And that means that the short end of the yield curve is higher than the long end of the yield curve. And we were in that for a very long time. Here recently, we have flipped back into a traditional uh, uh, structure. And so the short end yields have come down. And if you look here, you see off these lows right here, how the bonds have bounced higher on the 2 year. Okay. Yeah, than what was we just saw on the CNs. And that's because the yields have come off on the short end of the curve. Okay. And they're getting a better bid on the short end of the curve, and eventually, that tends to be lead into a recessionary scenario. Okay. As this happens. Okay. And then if you go put your ZBs, now look on the ZBs here. See how we're right here at these double bottoms? We're right into these double bottoms. So this is the long end of the curve. Okay, and we're going into the end of the year with a massive amount of U.S. debt refinancing towards the end of this year. And we're into these double lows right here. So be very mindful of what's happening here. We broke a very critical support yesterday here on the ZBs. Probably potentially coming into a very fast triple bottom here on our 30-year yields. Okay, so this is a problem, and breaking that's full on going to be talking about a correction in the markets likely. So be very mindful of that. Well below the 200-day moving average here on the ZBs, whereas the ZNs just broke the 200-day moving average. I can't remember what it was on the ZFs. ZFs are the 2 year. That's same right here. ZFs. See, ZFs are still above that 200-day moving average. Okay. See how it all changes a little bit there. So very important to note this. Long end curves are picking up. Trump's trying to negate this by just completely after Powell about lowering that interest rate, hopefully. And the theory is that he can by lowering and we're only talking 50 basis points was really the only thing that the Fed was even looking at, two more cuts, period, at all. And historically over the past 30 years, we're right at a fair value yield from the Federal Reserve. Okay, so it's not like we're overpriced. Uh, so let's be very mindful. We did have a little bit tick up in our uh, inflation data yesterday, and it's just starting, you know, and it's just going to be slow. It's just going to be slowly grinding. Some companies are building up 12 months worth of inventory, ahead of all these tariffs coming in here. So it's going to be slow for all this inflation data to come in. But I'm pretty sure, like most of us realize, that inflation data is going to come in to the economy. And, Trump's trying to play into, we got this big bubble of, people, retirees, who aren't buying goods and services right now. They have everything. They have their house. They have their home. Most everything they have is paid for. So by doing all this tariff thing, it's not really going to impact them as much uh, on the inflationary front. Okay, so that's kind of what his theory is. At least the demographics of our society right now, we can take on inflation right now in his mind, and his jobs thing is going to outweigh any inflation for the younger generation in his mind. So we'll see how it all plays out. We have that's kind of the way he is looking at the world. Okay. Things happening. Those are some things that are really happening here. So now that we're finally getting the semis coming off in the overnight, hopefully some of you managed to take some overnight shorts. So far, the main indices like ES here, that's your S&Ps here. We're still right here in this really tight digestive area. So 2 weeks ago, or last week, I put these anchored VWAPs on, and you notice how we went sideways since those anchored VWAPs. Uh, ESs this morning are well below just last week's uh, Sunday open anchored VWAP and the cash open anchored VWAP. So we're below both of those into this major support here, still holding. This major support is still holding here early on in today's session. So heads up on that going forward here. Okay. Um, Basically, I've been looking at from up here to a break of this level, which potentially is a bear flag right here. And I've been looking for a 2.5% sell down in the markets. Okay, guys. Basically mid-cycle, this time of the economy, we get a 2.5% sell down, cycle sell down. Okay, and in that situation, that would put us down here in the 6,200 area. In that situation, and we're just back testing that area as we speak this morning. So this is playing into my theory from early on this week. So let's be very mindful of that going forward into our trading. Okay. Let's see here. What else we got going on here? Slash NQ. NQ's here real quick. Okay, we're still in this really tight consolidation right here. Okay, guys. We're still above, this is actually showing a little bit more bullishness. We're still above last week's anchored VWAPs. So, bottom line is we come in early on in today's session, losing these anchored VWAPs from last week, then that's actually going to further uh, give me confidence of a downside correction. So right here, right now, it's still very much just by the dip here on the NQs as of right here, right now, this morning. Okay, so we'll see how it plays out going forward here in today's session. So we did, but this does look like an exhaustion high to me, suggesting that we're going to fade in today's session. So, especially after looking at the SMH, this really does look like an exhaustion high. We came right up into the weekly call wall, and boom, hammered down right into that weekly call wall. So basic. And what another thing that was really worrying me was on the SMH. We were deeply, deeply positive gamma in SMH yesterday. That was also giving me a big tell that the SMH looked like an exhaustion high because we were so, Wall Street they put they write these options expecting a large part of these options to go out of the money when all these uh, call walls, major call walls, and SMH were all deep in the money. It was a pretty good sign that Wall Street was going to do their best to push SMH back down, and retail was what was driving that price action. So it's no surprise to me at all, knowing how deeply positive gamma we were, that SMH came in like it did in the overnight sessions. Uh, Another thing I've mentioned to you guys: always look at the Russell as a leading indicator. And guess what, guys? You know, we have broken away from the last week's anchored view out. So this is leading us to a bigger breakdown in the markets. We're back testing the death cross uh, area this morning. So this here still above the 200 on the daily, but yeah, this much deeper pullback here, and this made a lot of sense because anything around the inflation data, the Russell has a bigger impact, tends to have a bigger impact, and a bigger impact on the Russell off of the inflation data is giving a much bigger, better leading indicator that the broad markets were not happy with the data as of yesterday. Okay, give me a second here. So, guys, yesterday, if you're looking at your breath indicators, look at this all day long. We were losing ground on the breath after that push. Really good sign of exhaustion high. Very good sign. Exhaustion high. Pretty much all day long we were making lower highs for the most part here on the advanced decline. Pretty much the cumulative tick kept getting worse throughout the day. Our index score was strongly negative for especially into the close as of yesterday. So our indicators, our breadth indicators, were actually giving us a pretty good sign that hey, we had possibly reached a cycle high in the markets as of yesterday. So be very mindful of this, taking it forward going into today's session. This was giving us our first major tell that we're seeing some exhaustion on that move, that news-driven move yesterday. So be very mindful of that going forward. Okay. TICU, because it was but even with that positive news uh, out of the about the Nvidia news, and you see what this happened. So right around I don't know 2:30 2:30 yesterday, things started turning negative on the our breath indicators here on the Qs. Okay, up here on the cumulative flow. So we have more sellers than buyers around 2:30 as of yesterday, and then a cumulative uh, the ticks were pretty much cumulative ticks from 9:30 on. They just kept getting worse. The cumulative ticks throughout the course of the session. Okay, so be very mindful of those little patterns going forward here. I got another one, the Russell here, if I can find it. There it is. And the Russell, similar situation all day long. Cumulative ticks. These are some pretty negative ticks starting to hit the markets here. Cumulative flow from about 10:30. Things really started uh, turning negative here on the Russell. Okay, so it wasn't right out of the gate, but the S&P is actually right out of the gate. The cumulative flow was negative, and it was catching on with the Russell as the session went on. Okay, and you see how your advanced decline just completely crashed out of the gate there on the Russell. So just a few little things I'm looking at here. I am calling. I am calling that we have just put in possibly a major cycle high in the markets, and at the minimum, still calling for that 2%, 2.5% pullback from those highs that we just put in yesterday. So let's definitely keep that in the back of our mind. That's in my opinion, the most bullish case. So let's definitely keep that in the back of our mind going forward here. If you like my video, please like it below on my YouTube channel, or X or StockTwits. I appreciate the feedback. You leave comments below if you're seeing some stuff that some opportunities. I want to hear about it. I made my money shorting the markets yesterday out of the gate. I was shorting the Qs right out of the gate yesterday, so and I made my 80% in just 10 minutes, and I called it a day. So I went fairly large. Uh, see, what's the Qs? Yeah, I went fairly large yesterday morning around. See here, what was it? 5 minutes. Yeah, it's Tuesday morning. Let me find it here. 9:30. Yeah, 9:30. We were up here. So we are opening right up in this area up here, up top side of my range right here. I was shorting the NASDAQ, okay? And I actually managed to take it all the way down into the wick area down here for a good 80% here move on that trade. And I called it a day. I mean, that was a nice move. I was fairly large in the trade, so made a few thousand on that little trade there here on the Qs. So you know, it was great. So I don't know what's going to happen early on this morning. Yesterday to me was just a no-brainer short. I mean, we had a massive gap up. It was a news-driven rally. We were into range highs. Uh, you saw the SMH. It looked like it was a potential exhaustion high on the SMH right as we opened yesterday. Uh, I actually thought we'd get a deeper pullback on the Qs yesterday, a much faster, deeper pullback. Ordinarily, I would have been trading the IWM, the Russell, out of the gate, but it was, and I was really on the fence which way to do. IWM, actually, the options on IWM, they saw a 4 time. The one strike, the 223s, I think, IWM, I think. Let me think here. The 223s here. They saw at least a 3, if not a 4 time return. 300%, 400% return on these options, these lotto options yesterday. The 223 is just one strike out of the money. Heads up on that. You know, I couldn't believe it. That you could have bought in up here, right up here, right here at the open. You could have got up here and got uh, that tag right there, and you could have got them for under 30 cents a contract, the 223s, and they just exploded to 400%. Uh, it was amazing to see it. I looked at it in hindsight and I said, why in the heck did I not take that trade? You can buy a contract, right here at the critical support, with inside the critical support for under 30 cents a contract. That was just like a no freaking brainer. I mean, and hindsight is 2020. You know how that is. Well, at any rate, thanks a lot, and I will see you on the other side.